Okay, there may be another couple, but we're already running a bit behind, so we're going to get started. So hello, everybody. Alex, cheers for that, mate. I appreciate it.
No problem.
Let's share the screen. Okay, can everybody see that? Alex, can you just let me know if you can see that?
Yeah, got you, mate. Yeah, your PowerPoint presentation is now with us.
Okay, cool. Okay, everybody. So after a bit of a frantic start there, thank you for coming on. We have got 15 registered. As and when they arrive, if they arrive, we'll let them in, but we're going to get going now anyway. So learning to invest in cryptocurrency, is this the biggest wealth transfer that we have ever seen? The market suggests that it is. There's a lot of friction against it. There's a lot of people saying that it's a Ponzi scheme. Of course, no one mentions the stock market being as such, but still, there's very little difference in the dynamics of the stock market and in the current cryptocurrency market in the sense of value. For example, Uber have never made a profit, yet are worth billions. Other companies, Netflix, I don't think have ever turned a profit and they're worth billions. Do they provide value to people? Yes, they do. But if we're going on, the value of stock, if you're not making any money as a company, then the stock price, therefore, in theory, shouldn't be worth anything. So before we go any further, let's lay it up front that the cryptocurrency market is not a Ponzi scheme or anything like that. Many people have made many millions and billions of pounds doing this. There's a lot of average people making thousands, tens of thousands and hundreds of thousands of pounds. So we're going to go through some of that today and how you can just start and get involved with that. So just a bit about me before we crack on. Who am I? I was a professional footballer up until I was 21. That's me towards the right-hand side there, next to the guy in the green on the right, 2 across. That's me, playing for Walsall FC in League One. I turned my hand to real estate, property investment after falling out of football for a couple of different reasons. One of them being I wasn't good enough. The other one being I left my hip and my groin on a pitch somewhere and I've never been able to find it since. I moved into bigger real estate. I was buying office blocks, banks, and converting them into residential property. I was doing that in my mid-20s, really, and I've continued to do that moving forward, but I'm more into commercial property now than residential. And then I started teaching people how to do that, mainly down in London with a business partner. That specific and commercial enterprise there has finished now, but I'll continue to do that on a one-on-one basis. And then after educating myself on how the financial markets work, I come to the realization that our money was being eroded very quickly by really, really poor money management by government and central banking institutions. And so I acquired quite a bit of gold and even more silver because I saw it as a hedge against this poor monetary policy. It's not going to make you give you cash flow. It's going to make you rich per se, but it's going to hedge you against poor money. And that's what we have today. In fact, we don't really have money. We have currency because money states that we should have a store of value one day should be more or less equal to what it is tomorrow. And that's not correct, as we'll go through later. And that also led me into the crypto markets. I first got into it in 2017. It took a big crash early 2018, which is where I earned a lot of my stripes. Took a 90% dip, some of the coins and tokens, and some of them even went out of business altogether. So I learned quite a lot in that period. I also come out of it probably about 50% down of my initial investment. So, but those now, having held them for four or 5 years, are where they were when I first bought them and beyond. So Bitcoin, Ethereum, all these coins and tokens that you may have heard of, I'm quite well acquainted with those, and also a lot of the smaller tokens, which is where you can build some serious wealth very quickly. You also have to use your noggin when to get out of them as well, which we'll go through. So this is my promise to you. I'll prove that anyone can increase their net worth whilst taking part in the biggest wealth transfer in human history. All of this without the need for lots of knowledge and technical skill. Now I'm saying I can show it you right now without any knowledge, but I would encourage you to learn as you're going through, as you take this path and as you learn the technicalities of cryptocurrency. I do encourage you to learn. But I have worked with people to increase their net worth, and they didn't have a clue. They didn't even know how to buy the stuff, showed them how to buy it. And they simply, in January this year, have done like a 4x on their money. So I'm going to show you how to do that. As a bit of proof here, this is a good friend of mine. He shared this. If you see the right-hand side, you can see a 768.56% increase on their money, and that was the guy from January actually. So he put a few £1,000 in, and he turned a lot of money by anyone's standards, really. And I had this a couple of weeks ago. This was just saying thank you, basically, on Instagram. So yeah, a bit of social proof. One of the biggest hurdles that we come across at Thinking Wealth is people saying, I haven't got enough money to invest. And that's a fair comment, right? Because I was in the same boat 2012. This was when I finished playing football. I didn't have any money. In fact, I was negative. I didn't have hardly any money at all. In fact, I was down. And a lot of people are in that situation after COVID. You know, once the furlough scheme finishes and all these other dynamics that's going on, if you're not from the UK here, it's fairly similar all the way around the world. But I suppose we're blessed in the UK that the government find it necessary to bail everything out. The issue is that long term, that's going to turn in on itself and not be very pleasant. But in 2012, I was in that same boat. I did have no money. But just a couple of examples here of how you don't actually need any money as such to make a lot here. So this was, as you can see on the left-hand side here, a date of the 17th of February, 2021. I bought just over £1,000 worth of a certain token. That's that Matic token there, which I still recommend today, by the way. So there's a little tip from this webinar. On the right-hand side, that is today, that same 15,000 Matic is worth £19,650. So that's a 1,781% increase. So for the smaller investor, £100 would have turned into £1,881. Now that's not life-changing sums of money. But if you're that way inclined, that probably buys you a holiday, unless Boris decides you're not allowed to go. That will buy you a holiday, or, a nice deposit on a car or something. Or you can compound it, which we'll talk about a bit later. Another example here, we bought this on the 6th of February as well, early Feb. We bought 1,000 of Theta token for £1,689.42. And of the 3rd of June today, that was worth £6,246. So that isn't anywhere near as big of a jump, but that's still in the space of 3 or 4 months, 369% on the money. So for 100 quid, that would have turned into £469. Now, as I'm going to show you later, if you're getting in 0.5% or 1% in a bank account, that's pretty healthy. And if you just sold that initial investment, that initial £100 and left the rest to grow, you'd be a pretty happy camper doing that, because you'd be safe in knowing that you're not going to lose any money, and anything else is extra profit. You can reinvest that into something else. And this is where that long-term thinking comes in, because as we say here, you haven't got enough money. Okay, well, lots of people, in fact, most people start from nothing or zero or something close to. And this is where long-term thinking really comes into play, because a lot of people in our short-term thinking culture, all they want to do is have money now, or have their financial future now, or anything, whatever it is, they want it now, right? And this is how the credit boom has been created, the creation of the credit card, so that we can buy now and pay later, essentially. Well, as with a lot of things in life, the short-term hardship is actually for the long-term reward. And so compounded interest, this is quite a cliche now, but it makes it a solid point. Would you rather take £1 million today or 1 pence doubled every day for 1 month? Short-term thinkers, as a rule, say, well, I'll take the £1 million today. 1 pence doubled every day for 1 month leads you to over 5 million, and that's in dollars, but doesn't make any difference, over £5 million. And if you do a full month of 31-day month, you're over 10.5 million. Now, if you look at the graph on the right-hand side there, you see that it isn't really until day 23, day 24, and day 25 that we really start seeing the significant impact of compounding. And this is what happens with people. So when they say they haven't got money, a lot of the reason for that, if it isn't for some, life concern, divorce or something like that, very often it's because they simply spend too much money. That they bring cash flow in and they spend as much cash flow in as they have going out. If we invest that surplus cash flow every month into something, your compounded wealth can look like that. Now, I'm not going to say you can, double it every year or whatever. That's probably not, my internet connection says it's unstable. Am I okay, everybody? Frenchie, can you just let me know, mate?
You've popped out once or twice, but it's come back fairly quickly, mate. So I think you're
Thank
okay.
you. Okay, so if you look at this, the 1 cent doubled every day for a month. For a 30-day month, you're over £5 million. Or you can take 1 million today. Short-term thinking versus long-term thinking. And I suggest taking this sort of attitude in not just in your financial well-being, but also all your other aspects like health and your career and things like that, your relationships. Take the time up front and that's sort of the way that long-term wealth creation is done. So one of the hurdles, the second hurdles, is it's too complicated. I don't know how to do it. Okay. And I understand that as well, because when I first got into it in 2017, I was in exactly the same situation. But the reality is that tech is the future, right? Technology is where it's going, whether people like to think about it or not. And digital currency, and the technology behind the digital currency, what we know as crypto, is what human beings are going to be using moving forward, regardless of what people like to think about it, whether they're scared to release that level of certainty that they live with. The tech that is coming with this stuff is revolutionary. I sent money to somebody who's happy to accept Bitcoin for a service, and that was done instantaneously with more or less zero fees. Nobody knew who sent the Bitcoin and nobody knew who received the Bitcoin. Now, there's a lot of benefit to that. I'm a bit of in terms of monetary policy, I'm a little bit of a libertarian in the sense that I don't believe people or the government should know where your money's going and how much money you've made. That's just a belief system. And some of the technology, for example, is being created to use that as, that technology can be used. Can it be manipulated for nefarious ends? Of course it can. But my question to that would be, what has been more dirty than cash? HSBC have fined billions of dollars for laundering drug money. So let's not pretend here that cash and the banking system is not completely dirty and corrupt. Can this technology be corrupted? Of course it can, the same as everything else. But let's not mistake, this is where it's going. Saying that, with mass adoption comes ease of use. So the more people that get adopted to this cryptocurrency, which it has, particularly Bitcoin over the last few years, it's just gone exponentially through the roof. The more people that get involved in this, the easier it's going to become. So as an example here, ETFs, they're creating those now in the US. We need one in the US really for mass adoption. There is already one in Canada. That's a fund, by the way, an ETF. And other financial products. But there, as it says in the article there, Bloomberg analyst optimistic on US Bitcoin ETF this year. And if we go on what has happened with the gold ETF, which was in the early 2000s, I believe, 2003 possibly, when there was a gold ETF, the gold price skyrocketed. Now, that isn't to say Bitcoin will do the same, but very often, patterns are created, and I can see that happening again if and when an ETF is created in the US. So my question to you, how badly do you want this financial freedom? Are you willing to pay the price? Is the technology, is the complexity of what's being created too scary for you to set yourself free? There's a link there. If you put in crypto.com/app and then all those digits after, you get $25 for signing up. I get $25 for signing up. And essentially you can bank transfer a little bit of money, not a lot, into your crypto.com account and buy some today. So it really isn't as difficult as you might think it is. Crypto.com is being created for the novice investor. It's not for the people who are day trading, really. It's for the long-term investors, the long-term holders, which is what I am. I don't trade too much. I do a little bit. But there's no futures, which is to say short and long options or anything on this. I don't want to get too complicated in this webinar, but there's no option agreements or anything on crypto.com. You can simply connect your bank, put 50, £100 in and just test for yourself. Okay, the third hurdle that I hear a lot is that it's too risky. And I understand this. This is an important point because it gets a lot of bad rap. Crypto does as an asset class. Many people saying that it'll just collapse. Well, let me read a quote by Helen Keller, an American author. Security is mostly superstition. It does not exist in nature, nor do the children of men as a whole experience it. Avoiding danger is no safer in the long run than outright exposure. Life is either a daring adventure or nothing. Now, I'm not standing here telling you to put life savings into crypto, far from it. If you know me personally, you'll know I'm very risk averse. I don't like taking big risks at all. I hedge my risks, hence the reason I bought a lot of gold and silver. I'm not a huge risk taker, and that does cost you big rewards, but it also makes sure that you can sleep well. And I'd rather be able to sleep than take enormous risks. So please recognize that thinking wealth, we are that way inclined. We are not hugely risk takers. So I'm going to ask you, can you afford to not take that risk? The stock market crash, or crashes over the last 100 years or so. 1929. Some of these were 80, 90% stock dips. 30 to 50% declines in the late 60s and early 70s. We had the dot-com crash where people were going bankrupt left, right, and center. I wasn't in business at there. I was only a young nipper at that point. But if you look at the stock market there, it never recovered, even in 2008, 2009, really. But now we're back up halfway up to the dot-com crash. So if we look at that graph, we've never even recovered from 2000, some of these stocks. So let's see crypto for what it is. Stock market crashes all the time, and most people have their life savings and pension funds and all this other good stuff in the stock market. Okay, that can go in an instant, and a lot of it right now is very, very overinflated. Look at real estate, house prices. If we see that big dip there, this graph's from the year 2000. If you see that big dip there in 2007, 2008, 2009, and then it dipped again as a double dip at the end of 2010. House prices dip and crash and everything as well. The cryptocurrency market is no different to this. Is it more volatile? Yes, it is. Is it real estate? Of course it isn't. People need to live in houses. Real estate is a safer bet, but you're not going to be able to create quick, instant wealth and long-term technology holding wealth like you will in cryptocurrency. And as I said here, can you afford to not take this risk? If you look at the savings accounts at the bottom there, 0.5% with Atom Bank, Chip 1.25%, Shawbrook 0.72%. The highest one we have there is Chip at 1.25, and we've got a 1.21, providing you tie it up for 3 years. Now, those interest savings accounts that we get in there are an absolute disgrace, an absolute waste of energy, a waste of time. You're probably better off putting it under your mattress, because inflation is eating away at that anyway. Inflation's higher than that, so you're actually losing money. So this was today. I took this out today. This is updated daily, as you can see there at the top. And this is the crypto market today alone on the right-hand side there. So Bitcoin is up 3%. You've got the highest one there, Polkadot, at number 8 on the market cap. That's done 9.8% today alone. Now, I've got to be honest here that the crypto market took a big dump about 2 weeks ago now, 2.5 weeks ago, maybe. So this is a recovery from that dump, but that dump has provided and is still providing enormous opportunity for people who haven't got themselves invested in the market. This is a perfect opportunity to get in. Now let's talk about quantitative easing, because as I said, can you afford to not get involved? This is directly from the Bank of England website. Quantitative easing is a tool that central banks like us can use to inject money directly into the economy. Money is either physical, like banknotes, or digital, aka crypto, like the money in your bank account. They're already using cryptocurrency. Quantitative easing involves us creating digital money. We then use it to buy things like government debt in the form of bonds. You may hear it called QE or asset purchase. These are the same thing. The aim of QE is simple. By creating this new money, we aim to boost spending and investing in the economy. Now, they've wrapped that up in cotton wool and they've put some nice sprinkles over the top of it. But the reality is that they're pumping in currency, because that is not money. They put money is either physical, it is, but what they're printing is not money, it's currency. Okay, there's a difference. I did a video on this. If you go on my YouTube, I talked about the difference between money and currency. This isn't money, this is currency. They can print it on demand. Money cannot be printed and created from thin air. Currency can. And this is the difference. Now, they're printing in the US trillions of dollars, which finds its way across the world in the global markets. In Britain, we've created, I think, just over £500 billion since the start of the COVID crisis. So as we can see, the purchasing power of the US dollar here from the early 20th century to into the 21st century. If you look at $100 in 1910, we're down to about $3 in 2020. So $3 today would have bought you $100 in 1910. And it's not going to get any better, unfortunately. I think Joe Biden was talking about another 6 trillion 2 days ago, I think. All that's doing is eroding your purchasing power, and it bleeds out across the world. This was an article from last year. About 20% of all US dollars were created this year, as I said, 2020. Data from the Fed shows that a broad measure of the stock of dollars, known as M2, rose from $15.34 trillion to $18.72 trillion in September. That's another 3.38 trillion. 3.38 trillion in 2020 alone. People cannot grasp how much money that is. It's simply unfathomable how much money that is. And this is an article from last year, the 4th of June. Bank of England is forecast to ramp up its money printing program to almost £1 trillion over the next year. That was from June 2020. I don't think that hit that, to be fair. I think it was £500 billion. And this is what this does. So we all might consider chocolates and sweets and everything to be not really matter, not much of a concern. But this is only a small micro of a big macro issue. So from 2014 to 2018, look at the decrease in sizes of the chocolate and sweets that we have in our household if you're unhealthy. Okay, so we've got nearly 30% there at the top with the Snickers. And you can work your way down yourself. We don't really notice these things because people think of inflation as, the government will tell you these things. Oh, inflation is 6, 7, 8%, whatever. The government don't tell you the real figures. The real figures come out in your day-to-day spending habits. So keep your eye, even from today, just keep your eye on the prices of small things like some tomatoes and grapes or things like that, and just check in 6 months the difference in price, because the supermarkets are very sneaky in what they do. You won't notice it in your bank account because £100 stays £100. But when you're buying things, you'll notice it'll hit your pocket a lot harder. So what choice do you have, really? I've spoken here about crypto and some of the problems that cryptocurrency hold in people's eyes. But look at what we've just gone through there. The world itself is making the decision for us here to take that plunge, to take that move with the evolution of humanity. This is what's happening. It's a natural, organic happening of humanity to create digital solutions to problems. So before we wrap up, we've got a few slides left. Let's talk about human psychology with all this. And the predominant one, because we talk a lot about psychology, we're putting a lot of content together here for Thinking Wealth around human psychology to do with investing and the fear and greed and pleasure principles. So let's talk a little bit on that. With most of the content will be on our platform. So predominantly we act from fear or pleasure. We move away from fear or we go towards pleasure. The issue is, and most people aren't aware of this, but fear is 2 times as powerful as pleasure. And this is an evolutionary instinct within us. Okay, so as we've evolved, if we go through the natural, if we use the Darwinian idea for this context, monkeys and cavemen and whatever, we've always, as we've gone cavemen, our brains have got bigger. We've always been on the lookout for threats and problems in our external environment, particularly the natural world, that might end our life, right? So that has instinctively created something that we are, in the back of our mind, there's always a sense of fear, right? And that's what we call the ego and everything. The ego is always sensing itself, trying to keep itself alive. Now, the human being today's, their fear principle is 2 times as powerful as their pleasure principle. So what we tend to see play out in the markets is that as things are dropping, particularly in the cryptocurrency markets, as things are dropping, they fall very quickly because the fear is more potent than the pleasure. So as we are going up, people, they're tentative with the pleasure. Although greed is a real thing, very real thing. We teach you how to get out and take profits sensibly as you go up, so you don't get big losses as you fall. But psychologically, most people are unaware of this, and they're driven by that fear, the fear of missing out, the fear of news articles are going to, drive the prices down, so they make rash decisions. And this is one of the things that Thinking Wealth is going to do. We're going to bring this type of information out to the average person, the person who perhaps hasn't been investing for a long time, hasn't got thousands upon thousands of pounds to invest, but are looking to create a solid financial future for themselves. And this is what we cover, along with the techniques of cryptocurrency. We also touch on property investment. I've been investing in property since 2012, and the market is red hot at the moment. I'm waiting for a nice big property crash. And I've got loads of strategies that we're creating all the content for now that you guys can just plug into and basically just rip off and completely use what we're putting on there for your own benefit. Of course, cryptocurrency, we will be doing weekly updates on what we're investing in. and how to invest safely. As we said, we're quite risk averse. What we do, we're not massively risk takers, so we talk heavily about that and new technology. As I said previously, I'm big into privacy coins, and so a couple of investments I'll put out to you guys is specifically for that. Nobody knows where your money's going and who's sent it to you, which is a big plus in my opinion. And precious metals, we're going to be talking about gold and silver. Of course, there's not as much content to talk about that. Gold and silver has been around for at least 12,000 years in the minds of humans as a store of value, and that's not going to go anywhere. The question to ask yourself, do you have a growth mindset or a fixed mindset? It seems two types of people, one who really want to get somewhere and set themselves up, and others who are happy where they are, and both are absolutely fine. This Thinking Wealth and this type of content is for the growth mindset, the people who want to become more stable in themselves, more emotionally mature, more wealthy, and actually become who can produce more for society. Because let's be real, wealth creates more wealth, and you can sort of spread that to certain scenarios that you see fit. So charity work and all that type of stuff. If you're that way inclined, you can do that with this type of information. So if you go on www.thinkingwealth.co.uk/subscribe, it's absolutely free. There's no money whatsoever here transacting at the moment. All we're doing is taking details because we are loading the platform up with content. As I speak here now, I've got people working on it, and it's going to be the go-to hub for all these things: real estate, crypto, and precious metals, psychology, mindset, that sort of thing as well. Regular updates on what's going on in the world economies and whatever. That's going to be a big player as well. Also a forum, as you can see there at the bottom, for daily contact with us and interaction with everybody else to do with Thinking Wealth. As I said, absolutely zero money transferred here. There's nothing. All we want to communicate with you is email address and name. That's it, so that we can keep in touch for when we do launch, which I hope is in about a month or so. So can you afford not to? The world is vastly changing right now, and it is time for people to pull the trigger, metaphorically pull the trigger and take control of their life, because the government, if you haven't realized in this last 12 months or so, haven't got a clue what they're doing in any aspect of people's lives. It's just the illusion of power and the illusion of control and knowledge. They don't have knowledge. If you haven't realized, the so-called experts in numerous different fields really aren't experts at all. They just repeat. So the information that we are creating here is historic. It's only our opinion and our beliefs as and when they arise. We do look and work with people who decide to come on board. We'll joint venture with you. If there's anything you want to joint venture on, more than happy to joint venture as well. So that's www.thinkingwealth.co.uk/subscribe. And now we're going into a Q&A. So if there's any questions that you guys want to ask about anything to do with what I've just spoken about, please feel free to go ahead and just unmute yourself, and we'll chat about it. Don't be shy.
Hello, mate.
Hello.
Al. It's Al.
Yes,
It's
hi.
Frenchy. How you doing, mate? I just thought I'd read out, just for clarity, you know what you mentioned about not understanding what $1 trillion is. It's hard to fathom.
Mm-hmm.
If you convert a million, a billion, and a trillion into seconds, this will help you, or help everybody on the call, understand how big a trillion is. So 1 million seconds is 11 days and 13 hours and 46 minutes. 1 billion seconds is 31 years. 1 trillion seconds is 31,688 years. So to give it a time context, you can see there how big a deal it is for Joe Biden and whoever in those positions of power to be printing that amount of money as regular as they have been.
Mm-hmm. Yep. Yep. It's good to put it into that linear context for people. Yeah. Just insane. And it's going to be getting worse and worse as well. I've got a question here. You mentioned Matic. Currently, its market cap is circa $6 billion. Yet, what would you expect it to reach in the next 12 months? I don't know. There's rumors that Matic will hit $10 on the next run. Now, I don't know when that run will be. I don't know. I haven't got a crystal ball. But at the moment, it's at about, correct me if I'm wrong, I think it's about $2. I haven't checked this evening. So if it's at $2, that'll be 5x that. So you'll be at 30 billion. So if it does hit $10, which is the word is $10, but that could be, that could just be a nice round figure for people to pluck out the air. Then, that'll be 5x from here, which will be 30 billion. Any more? Please feel free. Don't be shy. We will be running different webinars probably every other week to do with this type of stuff. But
hi, Alex. I'm Matt. I just asked that question.
Hello, Matt.
Cheers for the I had heard about $10. Whether, like you say, whether that's just a round figure that just seems nice to say. Just wondering your thoughts on some of the other cryptos that are going around at the moment. I've kind of been in crypto, but not heavily since 2017. Rode the 90% dips with a load of shit coins, and then Cardano or ADA.
Yeah, ADA. They've got like a cult following ADA, haven't they? Loads of people love ADA. I'm not sure with ADA about what difference that can make in comparison to like Ethereum. What can it do differently? I know there's a lot of hype and a lot of noise, a lot of talk about Africa and everything, but I personally don't own any. I bought and sold it in the past, a bit of trading, but I don't hold any at the moment. And what was the other coin you mentioned?
Just Cardano, which is obviously
the
same.
Yeah. I mean, I can't tell you much about it, mate, because I don't invest in it. So I can't talk about what I don't do, but I'm big into Monero, as I mentioned there, just because of the privacy aspect of it. That's a privacy coin. That I've got into that at like $40 last March, and it's up to like 310, I think, today at some point.
Yeah, so at about 300.
So, but there's opportunities every day. New things are coming out and being created and everything. There's a lot of, as you called them, shit coins there, a hell of a lot of those. And a lot of average investors, novice investors, get trapped in these things like that Dogecoin and Shiba coin and everything. I know it's made people money, but I think that's going to end pretty badly for folks.
Yeah. I had a friend contact me in about February, March time when Doge was like sitting at about 8 or 10 cents and saying, "Oh, I've heard it's the next big thing." And I said, "You need to be really careful. The next thing you know, it's like 50 cents." And I was like, Jesus Christ.
Yeah. Good old Elon Musk has had his way with that, I think.
Oh, he's had a right pump, hasn't he?
Yes. But he's got too much power, unfortunately, in this industry. I think it needs to be that needs to be wiped out, which hopefully it has done in this last crash, because although it wasn't his tweets that sort of caused the crash, it did have a little bit of an influence, I think.
When he seems to be wielding a lot of power, and if you're on Reddit and look at any of the memes, they've pretty much all got his face out all over it. So
yeah,
people are listening.
Yeah,
that's cool. I'm looking forward to the courses. So cheers.
Cool. Cheers, man. Thank you. Maria, it's good to see you on. I haven't, I don't think I've spoke to you for a long time. It's good to see you on. I know maybe you're not at the screen or whatever, but I'll send you the recording if you're not on, and you need to see it. Any other questions?
Hi, Alex.
Hello, Maria.
I wanted to ask you a question about, well, I heard that Lloyds is going to invest in real estate. What do you think about that? Can you hear me?
Yes, what was that? I just missed a couple of words that you said in there. Something, could you say it all
like
again?
Lloyds, I heard that Lloyds, the bank, is going to invest in real estate. So what do you think about that? Do you know anything about that?
Yes, I have heard the same as well. I think they're investing in real estate. I think that's probably a good idea, to be honest, from their perspective, because they're not the money that they lend out at like 2.5–3% nowadays isn't going to turn any profit for them. So if they're going to get into real estate in terms of their own balance sheet, I think that's probably a good business move. I'm not sure how good it is for the average person, but in terms of a commercial enterprise for Lloyds Bank, yeah, I think it's good. If it's good for the individual to invest in it, why wouldn't it be good for a big conglomerate like Lloyds Bank? I suppose they could, because of how much money they have, they could cause a monopoly, create a monopoly. But yeah, I don't really have much of an opinion on it, really, Maria.
Oh, yeah, thank you. Yeah, just wanted to know your opinion about that.
Yeah.
Yeah, thank you.
I mean, if Lloyds Bank go to the Bank of England and have, I don't know, let's say 30–40 billion off them, as most banks have had in the past, 2007, 2008, when they got bailed out by the taxpayer, if they get another 50–60 billion off the Bank of England and they go on a property spending spree, their balance sheet's going to look pretty healthy.
Oh, I see. Yeah, the only thing is that, as you said, that many people say that they're going to kind of like take over the market. You know what I mean? When they kind of like invest versus like more normal people.
Yeah, I mean, it's possible. It's hypotheses, isn't it? We don't know. It's all ifs and buts. But yeah, if they did, anybody who got their hands on 30–40 billion can do pretty well in the real estate market, can't they? Cheers for the question, Maria.
Thank you, Alex. Thank you.
Anyone else? No, we'll wrap it up if not. Okay. Al, do you want to add anything?
Hi, mate. Yeah, I think is it worth talking through the ambassador program that we bring in alongside the Thinking Wealth subscription?
Yeah. So if you subscribe, as we've mentioned there, www.thinkingwealth.co.uk/subscribe. If you register there, you will get introductory subscription service of £30 per month. For the time being, that will only last for a month or two at the beginning. As we launch in, the price will go up, but your 30 quid will be locked in at that point. The ambassador program, as Alex just mentioned there, basically every single person that you decide Thinking Wealth's content would be useful for, as they come into the subscription service and the platform itself, you will make £5 for every person that you bring in every month. So if you bring in 6 people, you will essentially get the platform for free. You'll get all your content for free. The forum will be completely for free, and you can continue. You get as many as you want, but you get £5 for every person that you bring in to the company. So you can essentially get paid to learn and be part of this movement, because this is for the average person to create some substantial wealth. And if there's anybody you think is ready to do that and you bring them in, you'll get a recurring revenue of £5 for every person that you bring in. And it only costs you £30 at the moment every month. So for every 6 people you get in, completely free.
We'll have obviously the Discord community group as well, won't we? Which will be supporting everybody that uses the subscription service, be it property, crypto, or precious metals. They'll each have their own section whether it's bouncing ideas off one another or whether it's after, you know, some help, tips or advice.
Yep. Okay.
Quick,
Go on, mate. Sorry.
I was going to say, quick question on property. As you say, market's ridiculous at the moment. Trying to get anything off the market is a challenge. Is there any like strategies that you're using at the moment to basically make money in this current climate?
Is there any strategies that I'm using? I'm still buying commercial stuff, but only sale and lease back properties. I won't really touch anything that's already tenanted at the moment. I think they're all overpriced. In terms of residential, I just think sourcing is probably your best bet at the moment. I don't really do much residential anymore. But anything that comes past my desk, we can sell easily if it's residential. If it's a good enough price, I just package them up and sell them to people. Cash in. Direct
to vendor and sell it.
Yeah, just cash in, mate. When everyone else is buying, you, in my opinion, just wait around, hold your feet firmly on the ground and get ready to pounce.
I'm desperate for a little crash.
It's that Warren Buffett quote, isn't it? Is it when everyone's fearful, be greedy, and vice versa?
Yeah.
And everyone's the thing is, there's that much money in the economy right now. There's never been so much money. It has to go somewhere. So people have been sitting on the backside for 12, 18 months on furlough and whatnot, and they haven't been spending the money really, other than in Jeff Bezos's pocket. But other than that, like, no one's spending anything. No one's going on holiday. So everyone's got cash. So they're like, there's going to be a short-term boom, whether that's 12 months, 18 months, I don't know. There's going to be a short-term boom. The government have just released 95% government-backed mortgages. So I can only see in the short term, the property market keep being really red hot. But at the end of furlough into next year, let's see where it starts to go. I think it might start to cool off a bit. And then I am expecting quite a significant dip, to be honest.
Yeah. Would you expect it to almost dip back to kind of what it was a year or two back, or more, even more so than that?
I think it depends. Yeah, difficult to say, but supply and demand is always going to be there for real estate, isn't it? But yeah, it's mainly to do with lending and interest rates. I think if they try and raise interest rates, I can see problems, because I just don't think people are going to be able to afford it. You know, we've got cheap debt. It's so cheap. I mean, if you can't make money borrowing from banks at like 2.5%, you're never going to be able to make money, are you?
Yeah.
If that starts rising, I can see a problem. If the banks turn around and say, right, we're not lending anymore, as happened in 2007, 2008, I can see obviously a huge problem. These government-backed loans, it just stinks of, 2006, 2007 again, where it was just willy-nilly. Everybody can have a loan.
Yeah.
If you could breathe, you got one, that type of loan. I can see that happening.
That happened with the company. I can't remember what they're called, but basically, if you had a company that had a director or a shareholder, you could get like 50 grand off the government with no proof.
Yeah.
That to me was insane.
Yeah. The bounce back loans and everything. And that's very similar to, what people don't understand is that this is going to be paid back one way or the other, whether that's through taxation, which I don't think they'll use taxation a little bit. But the reality is taxation won't make hardly a dent in what they've created here. No. It will have to be inflated away. It's going to have to be. And if we don't protect our own wealth, our own well-being and our own family's wealth and whatever, we're going to get stung by it. The purchasing power of our pound or our dollar or wherever you come from is going to decrease. It's got no choice, it's going to have to. So like that 500 billion might turn into 50 billion in the next 20 years in comparative measures. And that's the only way they're going to get out of this.
Forgive my ignorance, but how does them increasing like the basically how do they use inflation to get rid of the debt? How does that work?
Because so for example, £100 will be worth £1, for example.
Right. So then they just have less to collect back.
Basically, Yeah. So it's just
in a roundabout way.
In the future, let's say the 500 billion that pumped in there, that 500 billion in today's money might only be worth 50 billion in 20 years in comparative measure.
Yes.
So it's a lot less comparatively.
Yeah.
The US is in even more shit than the rest of the world, to be honest. But if America farts, the rest of the world tends to shit. And that's what's happening at the moment, I think. And Biden,
so you're in a good position to have high debt then.
Exactly right. That's what Kiyosaki talks about a lot, isn't it? He's getting to as much debt, good debt, as you possibly can.
Yeah.
To buy assets that create cash flow. And something that we talk about extensively in the content that we're creating at the moment is Alex French and I, who's on the call here, we've got some money in it's called Nexo. It's a online sort of crypto bank, if you like, NEXO, and they're paying 12% on the British pound at the moment. So you can like take your money out of your bank, put it in Nexo, which is a bank. It's completely regulated up to like, you get like $250,000 insurance policy on it, something like that. Don't quote me on the figure, but it's there or thereabouts. It's more than the FCA's 85 grand. And you get 12% on your money. It's like, it's just a no-brainer.
So you could go to a high street bank, take out a 10 grand loan at 3%, 4%, and then give it to them and just make cash.
Yeah.
God, don't be sharing information like that. But yeah, essentially you can.
That's crazy, isn't it?
Zero fees.
Amazing.
Mm-hmm.
Okay. Again, shows how worthless it is, doesn't it?
Yeah, it's all just a game, big fugazi, and we just need to create it in our own benefit, really. Simple as that. So that's been an hour, everybody. Just shy of an hour. We're going to start wrapping this up. Thank you for coming on. I'm very sorry about the internet problems at the beginning, and if I jumped in and out, sod's law, innit? Yeah, it's been working all day, and then 2 minutes before I come on, it shuts down. So thank you again for coming on. This is recorded. If you'd like a recording of it, please just send us an email. Send it to hello@thinkingwealth.co.uk. That's hello@thinkingwealth.co.uk, and I'll send you a copy of the recording. All right. Thank you. Bye-bye. Have a good evening.
Thank you.
Bye.
Bye.